Taiwanese chip giant TSMC just announced it plans to spend an additional $100 billion on expanding its manufacturing capacity in the United States. CEO and Chair C.C. announced the plans alongside the company's Q2 earnings in Taipei, where it unveiled another quarter of record profit. TSMC reported almost $22 billion in net profit for the second quarter this year. That marks a 70% jump from the same quarter last year. 2026 revenue growth is projected to reach above 40%. All this as C.C. also acknowledges larger macroeconomic uncertainties.
Looking ahead, we observe consumer and price-sensitive end market segment are being challenged due to the impact of rising component prices and macroeconomics uncertainties.
Nevertheless, TSMC says AI demand is robust. TSMC supplies chips used in everything from Apple iPhones to NVIDIA processors. And governments and tech companies around the world are pouring money into data centers to train AI models. This has caused business for TSMC to boom, but also leads to concerns about supply shortages and rising prices. To meet relentless demand, TSMC discussed strategies to expand capacity. Now this new investment plan is in Arizona, where TSMC has already pledged $165 billion in investment, including building 3 new chip plants. It's now floating another 4 more for the U.S. state.
We would like to announce an additional $100 billion investment in Arizona. This is to build several more semiconductor logical wafer fabs for 2 nanometer and below technologies, as well as advanced packaging fabs to support the strong multi-year demand from our leading U.S. customers.
Still, shareholders say they'll be looking for reassurance that chips made in the U.S. can eventually be produced at the same margins as those made in Taiwan. Today's conference indicates that spending on AI will continue to boost the chip industry, but investors will be watching to make sure that earnings and productivity gains can catch up with investments. Chen and LaMattina in Taipei for TaiwanPlus.